IPO boom. Record 1.6 trillion rupees raised in 2024. Bigger gains expected in 2025. Fundraising through IPOs in India hit another landmark as economic growth, favorable market conditions, and improvements in the regulatory framework helped companies raise a record 1.6 trillion rupees in 2024, while the pipeline for the next year holds out a bigger promise. This exceptional year not only reflected the confidence of issuers but also highlighted investors' eagerness to seize listing day gains or back companies with strong long term growth potential. The year was marked by Hyundai Motor India's historic IPO, the largest in the country's history, which raised 27,870 crore rupees. Companies of varying market capitalizations, large, mid, and small, tapped into the IPO route in 2024, with the average issue size rising significantly from 867 crore rupees in 2023 to over 1700 crore rupees in 2024. The exceptional vibrancy of the IPO market was evident, with December alone seeing at least 15 launches. The rising retail participation, strong domestic inflows, and active participation by FPIs, even though they have been net sellers in the secondary market, private capex increase and the government's strategic focus on infrastructure and key sectors have collectively laid a strong foundation for the fundraising momentum in India. V. Prashant Rao, Director and Head of ECM Investment Banking at Anand Rathi in Advisors, said. Fundraising momentum is expected to accelerate further in the new year, potentially surpassing 2024's record figures, market analysts said. Based on the 75 IPO documents, which are at various stages of approval or marketing, and the deal pipelines, we expect issuance activity in 2025 to cross 2.5 lakh crore rupees. Munish Agarwal, Managing Director and Head of Equity Capital Markets at Equirus, said. The IPO pipeline for the next year is set to feature major offerings including HDB Financial Services, proposed rupees 12,500 crore issue, LG Electronics India 15,000 crore rupees public float, and Hexaware Technologies 9,950 crore rupees offering. According to data available with the exchanges, 90 maiden public issues were launched in 2024, collectively raising 1.6 lakh crore rupees. This includes 8 IPOs scheduled to conclude on December 23rd to 24th. Besides, the 500 crore rupees IPO of Unimec Aerospace and Manufacturing is slated to open on December 23rd. Additionally, Vodafone Idea raised 18,000 crore rupees through a follow-on public offer. About 1.6 lakh crore rupees raised in 2024 far exceeded 49,436 crore rupees garnered by 57 firms through IPOs in 2023. By comparison, 2021 saw 63 companies raising 1.2 lakh crore rupees, marking the best IPO year in 2 decades, driven by abundant liquidity, increased retail investor participation, and sustained euphoria in the primary market. The resurgence in activity also extended to the SME segment, where a record 238 small and medium enterprises raised 8,700 crore rupees, nearly doubling the 4,686 crore rupees raised in 2023, according to the data provided by primedatabase.com. This growth reflects increasing interest in SME public offerings, although it comes with a heightened risks for retail investors. In response, SEBI decided to introduce stricter regulatory frameworks, including profitability requirements, a cap on the offer for sale component, and a draw of lots system for non-institutional investors to safeguard smaller investors. Experts attributed this year's robust IPO activity to a stable economic environment, policy continuity at a central government level, and a broad-based economic growth. Stable economic environment, policy continuity at the central government level combined with a broad-based growth have encouraged companies and investors to raise funds. Foreign portfolio investors have also been big buyers, especially in the larger IPOs, said Pranjal Srivastava, partner investment banking at Centrum Capital. Several factors, including private equity exist, sponsor driven sales, and shifts in corporate funding strategies, have also driven the IPO activity. The resurgence of manufacturing and increased private capital expenditure are key contributors as companies look to fund expansion and modernization. Many businesses are also focusing on diversifying their funding sources by shifting from debt heavy models to equity, ensuring stronger balance sheets and a reduced leverage, said Neha Agarwal, MD and Head Equity Market Capital Markets at JM Financial Institutional Securities. Among the year's largest main board IPOs, Hyundai Motor India led the pack, raising 27,870 crore rupees, followed by Swiggy 11,327 crore rupees, NTPC Green Energy 10,000 crore rupees, Bajaj Housing Finance 6,560 crore rupees, and Ola Electric Mobility 6,145 crore rupees. In contrast, Vibor Steel Tubes launched the smallest IPO, raising just 72 crore rupees, indicating the diversity of companies accessing the capital markets. For companies going public provides crucial funds for expansion, working capital and debt repayment while enhancing visibility and attracting new business opportunities. IPOs also serve as an exit strategy for long-term investors. Interestingly, the IPO subscription ratios have been exceptionally high this year. Vibor Steel Tubes saw an impressive subscription of 320 times, while other offerings like a KRN Heat Exchanger and Refrigeration, Manba Finance and Gala Precision Engineering were each subscribed over 200 times. Additionally, IPOs of companies like One MobiQuick Systems, Unicommerce eSolutions, Diffusion Engineers, BLS eServices, and Exicom Teleservices were subscribed more than 100 times. This strong demand translated into substantial listing gains, with over 60 companies delivering positive returns on their debut day. Vibor Steel Tubes, BLS e-Services, Bajaj Housing Finance and KRN Heat Exchanger delivered more than 100% gain, reflecting robust investor demand. Meanwhile, India's equity markets also saw record-breaking performances, with the NSE Nifty 50 reaching an all-time high of 26,216 points on September 27 and the BSE Sensex peaking at 85,836 points on September 26, supported by the country's robust economic growth outlook. So thank you for listening. Thank you for watching. Thank you everyone. Bye.